Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar and with me is Sonal Bhutra. Well, Sonal, really counting down, right? Just a few hours left before that Fed decision is finally out of the bag. The announcement comes at 11:30 p.m. and ahead of that, we've seen the markets actually slip from the top of the trading session. We opened about 100 points higher than where we are currently, though in the last 30 minutes, the markets are attempting a bit of a rebound.
So, of course, we'll discuss that and a lot more, Reema. But for now, we'll start with the auto sector. The industry delivered a mixed bag of sales for the month of October, and market leader Maruti Suzuki particularly saw sales dip 5% over the previous month. Our colleague Sonia Shenoy caught up with Shashank Srivastava, who's the senior ED, marketing and sales at the company, and started by asking about the outlook for sales over the next few months.
I think with the semiconductor situation getting better, the production getting better, and the pending bookings in the industry still quite strong, I would expect November and December numbers to be also strong. Although I must say that towards the year end, we would like ideally the inventory levels, both at the dealership and the factory, to be at the minimum. So we'll get to know, we'll see the way the inflow of bookings happen to make the judgment for the future months. By the way, October retails were in the industry estimated to be 368,000 against the September retail, which was actually on the lower side.
Okay. So if you're saying that November and December numbers will look good, on the domestic sales for wholesale, you've done about a little under 1.5 lakh units in the month of October. What could the run rate be in November and December?
So maybe I'll not be able to guide you on the forward numbers, but should be similar. Actually, I would expect December retails to be higher, as has usually been the trend in the previous years.
Okay, so December retails will be higher. Got that. Let's talk about exports as well. Export sales were under pressure, down about 4-5% in October. Have you seen any improvement at all in any of the export markets, and what is the way forward?
So I think we are in line to achieve the numbers, the record exports that we achieved last year, which was about 238,000 or so, and in fact exceeded. Of course, you must remember that shipment dates make a lot of difference for these export numbers. So a ship which would be sailing, let's say, on the 2nd of November would be counted in November sales. If it was only 2 days before, it would have counted in October. So I think the performance there has been consistent, and we expect the consistent performance for the balance year as well.
Okay. Within the domestic market, I wanted to check a little bit on how the small car sales were doing, purely because that pocket has struggled a bit as the rural market has not recovered as much as expected. Have you seen normalcy return there?
In the small car market, we did see the improvement both in the Q2 as well as in October. Now that market is roughly around 36% of the overall industry, which had fallen down to about 33% prior to September. A lot of it, of course, has to do with the introduction of the Alto K10, and that has helped us. And in fact, Alto has become the #1 model in the industry for the last 2 months by a far wide margin, 25,000 numbers in September and almost 24,000 numbers in October.
Okay, on that note, we'll slip into a very short break. Up next, we'll be joined by Atul Kumar Goyal, MD and CEO at Punjab National Bank.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. For the markets, we are at the day's low as we speak. It's a 75-point downtick on the Nifty. If we look at what's causing this pressure, it's the Bank Nifty, which is down 172 points. And we have stocks like Axis Bank, which is at the day's low, IndusInd Bank too. Maruti Suzuki is the other one. We just spoke to the management as well. Infosys, HUL, SBI, some of these bigger names, they are at the day's low, and that is something which is putting pressure on the Nifty. The mid-cap side of things, they are outperforming the benchmark, so that index is down 0.1%. That compares with the fall of around 0.4% that we are seeing on the benchmarks, and a couple of stocks which are seeing lows of the day in the broader markets. We have something like a Power Grid, Bank of Baroda, BPCL, Samvardh Motherson, all of these stocks at the day's low. But let's talk about some results that came
from First Source as well. As you can see on your screen, revenues are up close to about 1%, I think close to about 1.5% on a quarter-on-quarter basis. Margins on a quarter-on-quarter basis have dipped by nearly 50 basis points. It now stands at 12% at the EBITDA level, while at the EBIT level, it's also dipped by 50 basis points to 7.5%. But there is a big jump that you can see in the profitability. Profits up 52%, aided by the higher other income. In the case of Firstsource, the key to track will be their guidance. If you remember, in the last couple of quarters, the company has been bringing down its revenue guidance. Now, it gets about 45-50% of its revenues from the financial sector. In that, about a big chunk of it, I think 40-50%, comes in from the mortgage segment. So what happens is, when the interest rates are rising, the number of people applying for refinancing will come down, right? When the rates are low, a lot of people will try and refinance. So the mortgage volumes come down, and therefore the applications that Firstsource, provides, that's the business it is in, gets impacted. So that's the reason why Firstsource has been struggling for the last couple of, quarters because of rising interest, at least since the start of this year. And they had brought down their revenue guidance. So, more than the numbers, what the street will track will be the revenue guidance, because they're hit on account of their presence in the mortgage business, which is hurting due to higher interest rates.
Okay, interesting. Thank you for explaining that to us, Reema. So, of course, guidance is something we'll be watching out for. But the other stock that is in focus is LIC Housing Finance. Delivered a poor second quarter. It was sequentially weak for the company, where net interest income fell nearly 30%. We spoke to the MD and CEO of the company, and he said about the company's performance and what weighed on the performance as well.
As far as the NIMs are concerned, we are very confident that in the quarters to come, there will be definitely an improvement beyond what we are now have planned also. And we are very sure that the credit cost will be around 45 to 50 basis points analyzed. That's what we are looking at. Then going forward, both in the developer book and also as well as the individual loan book, we will have very good improvement in our NPAs. Loan book growth is concerned now, we are very optimistic that the growth is around 15%. Then in the coming 2 quarters also, the demand is robust. And we are very sure and confident that we will be showing a growth of minimum 15% for the whole year.
All right, that is about LIC Housing Finance, but let's focus on Punjab National Bank now. It is in focus. The lender has reported its best net interest income growth in 10 quarters, even as slippages remained elevated. Note that employee costs weighed on profitability in quarter 2. To discuss the quarter gone by, we are joined by Atul Kumar Goyal, who is the MD and CEO of the bank. Mr. Goyal, good afternoon. Thanks a lot for joining us. Well, your NII growth is the best in 10 quarters. Profits, however, impacted by some elevated employee costs this time around. But I wanted to check on credit costs first, because they are elevated at 236 basis points versus 252 basis points on a quarter-on-quarter basis. What is the outlook on the same?
Thank you very much. Regarding the credit cost, madam, it is not increased. If you see the quarter, you are talking about the quarter to quarter, it was 2.46%. The total provision for the June 2022 quarter, it was 4,814 crore, which has reduced to 3,559. So it has reduced 1.76 as compared to the quarter to quarter 2.46. Although it was, if you see the last year YOY, then it was 1.47 in the last year. But quarter to quarter sequential basis pe, it is decreasing.
Yes, sir. But I wanted to know, since they are still at elevated levels, what is the outlook on credit costs in general?
Credit cost, we 1.76, it has reduced from the 2.46. The whole of the year, we are giving the guidance of it will be remain within 2% or less than 2%.
Okay. So 2% or less. Can you talk about your net interest margins, sir? Your net interest margins have come in at a 7-quarter high. Global NIMs at 3%, while domestic NIMs are also at 3%. Can you sustain NIMs at these levels? Because now increasingly we are seeing a lot of banks, increase the lending rate as well. So what's the outlook on NIMs?
The outlook of the NIM, there is 2 things. The NIM in percentage and NIM in the absolute number. Absolute number, there is a increase in the 30% as compared to the YOY, and we will maintain the NIM in the absolute number also quarter to quarter, and it will further increase. The reason of the increase in NII, because there is an increase in the advance, where we are having the high yield also, because we have changed the portfolio from the corporate to the RAM, where we are getting the good yield. And the other thing is also because we are getting the recovery. You see the recovery number. Recovery number, we have given the target last year 32,000 for whole of the year. So 8,000 per quarter. This time quarter in the September, it was 8,500 plus. So whatever recovery we are having, it is starting yielding. So this is the reason that recovery in the next quarter and the March quarter will also improve. So NIM in absolute number will also increase, and 2.9 was the last quarter and 3.11 is the current quarter. So we are giving the guidance that it will remain within the range of the 2.9 to 3%.
Okay, 2.9 to 3% is the NIM guidance, that is net interest margin guidance by PNB. Do you stick to the guidance when it comes to your gross and net NPA? You had told us last time you aim to bring down net NPA to 3.5% by March 31st and gross NPA to be less than 10%. There has been an improvement in both these numbers this quarter as well. Are we headed towards this guidance?
No, you are very much right. We are revising the guidance, because we have seen ki whatever the number of the recovery we have fixed, and slippage is less than the recovery number. So last time we have given the guidance ki our gross NPA by March 23 will be the single digit, that we are maintaining. But the net NPA, which we have told you, it will be 3.5. Now we are revising because we have already touched the 3.80. So it will be 3 or less than 3 in the March 23.
Okay, 3 or less than 3.
And gross NPA, sir? You said
Gross
sub
NPA,
10%, but any number?
Single digit. Yeah, it will come in the single digit. Yeah, because as on date, if you do 10.48%, and every quarter by quarter, there is a reduction of the 60 to 70 basis point. So we can think it will be the less than 10%, maybe around 9.75. Yeah.
Okay. Can you talk about the growth that you're seeing on the loan front, the advances growth? And if you could provide some color on the outlook of that and in various segments that you operate?
The loan growth, if you see as on date YOY, it is 12.84%. And last time we have given the guidance ki that will be around 10%. So we are also revising. Now it will be within the range of the 12 to 13%. And there is a lot of demand from the infra side also. Infra side mein road project there is a demand from the steel sector also, and some of the corporate who were not utilizing their working capital limit, they have also starting the utilization, and there is a lot of demand from the NBFCs also. We are doing the finance to NBFC. As on date, my exposure to the NBFC is 1,18,000 crore. Out of 1,18,000 crore rupees, 97% is A and above rate external rated.
Okay, so that is about your growth guidance there as well. What about slippages? This time around, it has declined on a quarter-on-quarter basis. You had spoken about 6,000 crore rupees slippages every quarter. Will you be able to revising that as well, considering that the other parameters are looking so much better than earlier?
Yeah, we are on the right path, madam. We are on the very right path. It will decline quarter to quarter also, because if you see the last quarter, the slippage was in the range of the 6,400 plus, which has reduced to less than 6,000 crore in the September quarter. So quarter by quarter it will be released. Our endeavor was key recovery should be more than the slippage. The debt we have achieved in the last quarter also. Last quarter our recovery was 7,057 crore as against the slippage of 6,400. This time recovery was 8,500 plus against the slippage less than 6,000 crore. So we are also of the view that it will remain within the range of the 5,500 to 6,000 crore in the quarters to come. But 23-24, that will be the very golden period for the Punjab National Bank.
Okay, so next year is going to be the golden period for PNB. One final question, sir. Are you looking to monetize your stake in any subsidiaries, JVs?
As on date, we don't have any plan to monetize in the any holding in the subsidiary, except one of the ARC, which we have to bring less than 10% as per the regulation guidelines.
Okay, all right, Mr. Goyal. It was a pleasure speaking with you. Thank you so much for joining us and taking those questions as well. So that's Punjab National Bank. They have revised guidance for net NPA. It was earlier 3.5%. It will now be 3% or less than 3%. Gross NPA will be as per the earlier guidance of 10%. And in terms of their loan growth also, they are looking at a number of 12 to 13% in terms of growth versus 10% earlier. The stock is under some pressure, down around 1.5%. With that, we'll do one thing. We'll slip into a break now. Up next, we'll be joined by Siddhartha Siaj, the joint MD at Vishnu Chemicals, to discuss the company's Q2 earnings.
Talk on our radar right now is Vishnu Chemicals. They've reported a strong Q2, revenue growth of 55%, margins expanding by 250 basis points to 16.7%, and profits have more than doubled to 35 crore. The stock also has doubled so far this year. So if you pull up a one-year chart, you would see it's up more than 100%. We're now joined by Siddharth Cherukuri, the Joint MD at Vishnu Chemicals. Siddharth, great speaking with you again, and congratulations. First, this top-line growth of 55%. Could you break that up in terms of volume growth? How much was an account of realization? And in the volume growth, how much of it is due to increased capacity?
Thank you very much for having me, Rima, again. The volume growth is about 16% in this quarter, and the value growth is around 25% on a standalone basis, what we have seen here.
And how much of it, as Rima said, is from the new capacity? There was a new commissioning as well that happened in Q2. And additionally, how much would that mean for your volume growth going forward?
The new capacity is going to come online this quarter, as per the previous guidance. I mean, our debottlenecking activity in our chrome plant has been completed. So additional 10,000 tons are going to come online from this quarter, basically. So, the previous quarter, there is no additional volumes as such. It's more of a value growth and margin improvement on account of backward integration performing well and operating at currently at 70%.
So when we last spoke to you, you had indicated a overall volume growth of 30% in FY23 and margin improvement of 200 to 300 basis points. Would you like to revise that, considering how strong Q2 has been?
When I said 16%, it's on this half-year basis. So our volume growth will remain the same, and we don't intend to revise our guidance. So on a calculated on this half-yearly basis, I get said about 16% over the last 6 months.
Okay. So volume growth at 16% in first half, and you expect a 20 to a 30% volume growth in FY23. Can you tell us in general? Last time when we spoke, you had spoken about higher inquiries coming in from US and Europe because of whatever is happening globally. There was a shift in terms of demand coming in from your Turkish competitor as well. How is the situation right now? Have those volumes moved towards Vishnu Chemicals?
We are still in discussions with the clientele, especially in the North America, and we are seeing good traction. And this will hopefully convert into orders in the Q4. And our marketing team is working very aggressively to, capitalize on this opportunity.
Okay. Could you talk a bit about margin improvement from here on? This quarter, you managed to improve it. You spoke about further value-added growth coming in the second half. What could the exit margins look like for you?
It's the kind of guidance I can give is today the current backward integration operation is at 70%, and we aim to achieve 90% by Q4. So with that additional 200 to 300 basis point EBITDA margin improvement is very possible.
Okay.
That's how we look at it. And on top of it, we see some significant softening on the sea freights as well. So that will also add to some margin improvement.
Can you touch the 20% mark on margins?
That's towards the end of the quarter is what we are targeting, and it's very likely to happen.
Okay, 20% by the end of the quarter. Just wanted a clarification here, Siddharth, as well. The 10,000 tons per annum of capacity that you're talking about, that gets commissioned in Q3, not Q2?
Yes.
Okay, all right. So those additional volumes will start flowing in then. All right. So that's about this additional capacity in chromium chemistry. You have a substantial chunk coming in from exports as well. Because of whatever we spoke about, higher demand coming in from US and Europe, are you able to capitalize on that? And are exports coming in at higher margins for you? Because you're also talking about lower freight in general. Is pricing something that can differ in export markets now?
During the COVID period, when there has been a kind of roller coaster on the sea freights going on a week-on-week basis. So with our regular customers, we have gone to an FOB plus freight actuals. So I can't really say that reduction of sea freight will add to the margin, but definitely it will help to improve the volumes, because this will definitely put us at a better competitive position.
Okay, so generally not a big margin difference, so to say, except for this freight rate difference that you're talking about.
Yes.
Okay, all right.
Europe is about 19% of your overall exports. Any signs of, slowdown in this winter? Maybe are any of your customers under stress?
I mean, there has been, we have witnessed some slowdown during this quarter, but like I said, most of the clients we are working are multinationals having operations in Egypt, Southeast Asia, and even Brazil. So they've asked us to move the shipments to that part of the world, and we have been able to successfully do it in that way.
Okay. So right now, chromium is higher part of the revenue contribution. Barium is little less. Can you tell us, will this contribution metric change going forward? And in FY24, you have something like the infrastructure for key raw material for chromium chemistry also coming up. Putting all this together, this 20% margin by the end of this quarter, what does it look like in FY24?
We have a product launch in barium, which is precipitated barium sulfate, which is a paint filler, and we are looking forward for it. And if you ask me when we expect the commercial production to come online, we are expecting it during the first quarter of next financial year. It's hard to put a number on it, what kind of revenues it will generate in the year to come. But since it's more on a developing phase, and we need to get the acceptance from the customers. But since it's a direct import replacement, I think the approvals will be much faster, and the product is growing in India at 7 to 8% level, and that will definitely give us a lot of leverage to position ourselves in the domestic market sooner than later.
Okay. All right, Siddharth, it was a pleasure speaking with you as always. Thanks a lot for joining us, making sense of the numbers and speaking about the outlook as well. That's the word coming in from Vishnu Chemicals. Strong set of numbers this time around, and they maintain their strong guidance as well. The stock, though, is down, has come in for some profit taking today, down 2.5%. And with that, Rima, we'll take their leave on this edition of Midcap Radar. Thank you so much for joining. Your stocks when we return.